Hello, traders. FX Pip Collector here. Today is Sunday, October 12th, and this is my full top down analysis for the US dollar yen. And we're on the monthly time frame, working our way all the way down to the 1 hour for the full top down analysis. So I've been saying for a while that I think this is either going to go down to the 100% Fibonacci extension, which is also lines up with the 78% Fibonacci retracement, or it's going to go down to the 161, 178 Fibonacci extension. Now, we did make a little bit of a break of structure up on sort of time phase, but a break of structure doesn't mean that it needs to be a trend reversal. A break of structure means that it either is a trend reversal or it's just a pullback to the last move down. So this move up definitely still could end up being a pullback to this move down, and we definitely could end up pushing down. Maybe this is going to turn into more of like a WXY than just a traditional ABC correction. So going down to the weekly time frame, I got my Fibonacci retracement on this whole move down because we definitely did break structure. Now on the shorter time frames, price is actually sitting right in between two Fibonacci levels. But I wanted to kind of point this out a little bit because let's say this does turn right here to the downside and start a brand new move to the downside. That would be respecting the 61% on the weekly. Yes, it did go beyond the 61%, but on the weekly time frame, it only was able to spike above the 61%. It wasn't able to hold. If you go down to the sort of time phase, it looks like price is sitting right in between two fib levels, which it definitely is. But if you are on the right time frame, which in this instance is the weekly, then it just was spiked above the 61. It wasn't able to hold above the 61. Now, what kind of correction this is, I don't really even know. I mean, I had it labeled as a WXY. Maybe it's a WXYXZ pattern, some sort of like a triangle or something, but definitely a very odd looking little pattern. Going down to the daily, now I wanted to point that out on the weekly because this is a very solid turn right here to the downside. It could possibly be starting the trend reversal that we've been waiting for. So this possibly could be a top right here. So taking it down to the daily time, the 4 hour time frame, that is, we have a break of structure on the 4 hour. This is the correctly tuned time frame because you can see the higher highs, higher lows very clearly, and then you can see the break of structure. So we know that the trend from here to here is over. Now, when you have the end of a trend, only two things can happen. It can be a complete trend reversal. It can go down and take out the low where the trend started, or it can end up being a pullback to the last trend, meaning that it would end up making some sort of a corrective pattern like this. Luckily, if we use our best indicator, which our best indicator is always our eyeballs, our eyes are always going to tell us more than any indicator ever could. If we see an overlapping corrective pattern like this, we know that we're going to end up going up again. If it makes impulsive lower lows, lower highs, then we're going to be very confident that it's going to just keep on going down. So taking it all the way down to the 1 hour time frame, we obviously want to look for shorts, and we obviously don't really want to go short right at the bottom of an impulsive move. Unfortunately, right now the strategy is to be patiently waiting for the pullbacks to go short, while hopefully we are learning and earning whether this move turns into a corrective pattern or whether it maintains impulsive movement and makes a complete trend reversal on the 4 hour time frame. So, anyways, don't forget to check out my website linked over here in the corner. And as always, thank you for watching and happy trading.